Well, his fund is beating 99% of its peers' 5-year performance with his famously contrarian stock picks. So what is Donald Yacktman buying now? We're going to put that question to the man himself. The President and Chief Investment Officer of Yacktman Asset Management joins us now live from Austin, Texas this morning. And he is one of Morningstar's finalists for Fund Manager of the Decade, sir. I was looking at your lineup of buys right now of your holdings, and it was a bit surprising to me that you had media stocks in your top 5. Why do you like media now?
Well, what happened is, as the economy had problems and the stock market nosedived, they became very attractive. And even though they've risen, and you're mainly talking about Viacom and News Corp, although we have added Comcast in the last quarter. But even though the market's risen and they have risen, they're still reasonably good values. Clearly, they're not the values they were early in the year.
So we've all heard about the malaise that exists in the ad sales market right now. When it comes to Comcast, you say you just added it. Of course, that raises questions about the potential acquisition there of NBC Universal. Is there a price that Comcast would pay for that body that would make you reconsider your position in the stock?
I doubt it. The market has already discounted some unfavorable news in the stock price, and while we continue to be a little bit nervous about it, I think, again, the discount is so much that it's probably already taken into account in the price.
Now, you have 14% of your portfolio in cash right now. What would make you feel confident enough to lessen that percentage?
Oh, I don't know, probably a good 15–20% decline in overall stocks would send some down and create a great buying opportunity. But that's a residual for us, so it's a matter of usually the tree gets shaken and some apples fall down, and we go sort through them and find the ones that we want to own.
Your fund has performed better than 95% of its peers this year. What do you attribute that to? What were you looking at that made you take the positions that you did when you did?
Well, I think we did some fortunate things. We look at forward rates of return, and we were in a situation, say, a year and a half ago, where we had a lot of high-quality investments. It's similar to like owning AAA bonds, Coke, Pepsi, Procter & Gamble, etc., and cash. And when the market nosedived about a year ago, we used up our cash, and then we started to shed some of the other stocks that held up so well, like Procter, let's say, and invested them in things that had more economic sensitivity because they had fallen off the charts. It was like selling an 11% bond to pick up a 20% bond. And so Viacom, News Corp, some of the retailers, Abercrombie, Williams Sonoma, Liberty Media, which is QVC, some of the a big addition to Americredit, which is a subprime used car auto lender, some of the banks. So we were just, I think, flexible enough, and we were objective enough to make those kind of moves, and they paid off very, very well.
Would you be adding to your positions in any of these stocks right now? I mean, among your top 10, you've already talked about the media firms. So you've got Pepsi in there, you've got Procter & Gamble, Microsoft, Pfizer, ConocoPhillips.
Well, I think what it's telling you is that we're right back to where we were, say, 15 months to 2 years ago, where now the best values to us seem to be the businesses that are very high quality. We also have some cash, but we did we did make a substantial investment in Comcast last quarter, and as well as we invested not a top 10 position, but a pretty good position in H&R Block. So those are really our 2 major additions.